with us Mayuresh Joshi joining us, and Deven Choksi will also join us shortly. Mayuresh, hi. Interesting bits as usual. Coming in from the Reliance AGM, not too much hint given about value unlocking, but at least talking about how Reliance Retail is likely to be an important growth driver for them going forward, the kind of tie-ups they have done, and the kind of expansion plans they have. Your take?
Afternoon, Anisha. No, absolutely. I think both in terms of Reliance Retail as well as Jio, I think the presentations were very, very elaborate. And with those two businesses expected to garner a large part of the EBIT going forward as well, I think what they have delivered so far in terms of both the store opening number for Reliance Retail, the number of transactions that have gone through, but also the gradual improvement in EBIT margins that you're probably witnessing across business lines within the retail vertical itself, whether it's grocery, AGO, lifestyle products, or even the consumer electronics products. We are as we are speaking, I think number of stores in the past quarter have been added significantly. We're talking about 18,500 odd stores. We're talking about an EBITDA margin which has reached 7.9 odd %, which is a commendable task from where they started off a few quarters back. And therefore, retail is on a very strong footing. Similarly for Jio, I think the announcement that they've probably done was on expected lines in terms of the fiber launch, specifically the AirFiber and the target audience that they're probably having, both in terms of the enterprise stroke HNI customers from 10 odd million targeting 200 odd million, as well as the 2G entire Bharat Mukh Abhiyan, where they're probably looking at a 25 crore conversion happening through their handsets, which are affordably priced. So yes, I think the announcements on Jio and retail were elaborate, and the businesses are expected to get a decent clip over the next few quarters.
Right, Mayuresh. Harsh also joining in. Want to quickly check on your views with regard to Jio Finance, of course, newly listed. Not much spoken about it, but if you can give us your views as to what the larger expectation was that you had, and where has that probably fallen short, or how would you assess it?
So I think two aspects here. I was not expecting a large amount to be discussed in the AGM because I think AGM is a moment where you probably discuss just the broad aspects, and that is what Mukesh has probably done. Did it fall short a little bit in terms of what expectations were in terms of elaborate presentations like a Jio and retail? Absolutely yes. But I'm pretty sure I think the Jio management, the Jio financial management will probably come out with a very elaborate presentation. We've probably been given hints that it might be a digital offering embarking upon technology as a backbone for the entire evolving structure as the financial services arm progresses. At the same time, my own sense is that we will make full use in terms of the retail network and the low-hanging fruit, specifically when it comes to consumer lending. And therefore, I think the untapped opportunity that Mukesh was probably speaking about, that probably exists, and there are competition pressures that are even existent as we speak. A digital offering, which is a low-cost offering, which can probably ensure that consumers transition faster onto the platform, and the tie-up with BlackRock in terms of a large suite coming through on the asset management business and probably entering into the life insurance business as well. I think you are probably seeing some spheres of all financial aspects being touched. But I think a more detailed plan is something that will probably come through as the Jio financial management individually take up their strategy in the next few weeks. But yes, if you ask me, a little bit disappointing, but I think AGMs are supposed to be short and crisp and not an elaborate.
Well, yeah, but we are just used to seeing big announcements happen in Reliance AGM, so the expectations always ride high. But just hold that thought, Mayuresh, since we are talking about the financial services arm, let's listen into what Larry Fink of BlackRock also had to say, given the fact that tie-up is there and he's banking big on India, saying that there's a lot of potential there, given the entire financialization of savings that we are seeing.
Our companies have a shared vision to create better financial futures. And Jio BlackRock will deliver our combined expertise and scale to unlock the power of investing for millions of people throughout India. Global investors recognize that India is at the cutting edge of digital transformation, in large part because of Reliance and Jio have built a digital and consumer ecosystem unparalleled anywhere else in the world. There is an unprecedented opportunity to transform the asset management industry by introducing a full-service, tech-enabled asset manager with affordable and transparent investment products to meet the needs of every segment of society. Geo Financial Services bring digital infrastructure and capabilities and local market knowledge, and BlackRock brings global investment and risk management expertise. Together, we will aim to transform the asset management industry through a digital-first offering and democratization of access to affordable, innovative investment solutions for millions of investors throughout India.
Okay, so that's the latest commentary coming in. But, Mayuresh, what's interesting is the fact that whenever we talk about Reliance these days, we pick up perhaps a Jio to talk about, a retail or the financial services, and the O2C business actually comes at last. Do you think for the company itself, with the stock of Reliance now, apart from the value unlocking, there is no fresh trigger, or do you think there's enough steam when it comes to the O2C business as well?
There is, Anisha, and to a certain extent, I think the transition that is happening globally. I'll give an example of Aramco and what Aramco has been doing over the past few quarters. Aramco itself has been transforming itself into an O2C giant. So I think the entire perspective that Reliance probably wants to get on board with the O2C business is that the EBITDA and the consistency in EBITDA probably stays on in a process where I think you're seeing a lot of electrification that will happen and a lot of thrust towards renewables. And therefore, I think the O2C part of the business, as it shifts its thrust towards the chemical part of the business, it will be more sustainable in terms of more addressable numbers, both in terms of revenues and margins. Having said that, I think the new energy businesses and what the chairman spoke about, Mukesh Bhai, I think it was very much on track. We're expecting gigafactories coming out in terms of batteries by 26. The solar one by 25, and around 100 bio-compressed plants over the next 5 years. So I think the entire transition that Reliance is probably planning over the next 5 to 7 years is having the entire perspective of green energy probably come through. And with that, I think the entire perspective of being carbon neutral and being a net exporter, I think we'll have the first mover advantage in terms of providing green energy, green hydrogen to a lot of industries if you produce at that scale. So I think that is the thinking that Reliance probably has, both in terms of the O2C transition as well as the new energy businesses.
And also, if I can, coax you on this one, we've seen a little bit of value unlocking already start to happen within Reliance with Jio Financial being listed. What next, and what would conclusions be with regard to this particular demerger and this particular value unlocking of sorts? How should one read into it, even in terms of timelines, if you have a view?
So, for Jio Financial is what you're asking?
No, for overall the Reliance business, of course, it's well known that there is going to be value unlocking happening within the business going forward, whether you call it energy or whether you call it telecom. How should one look at the value unlocking in terms of timelines, as well as how should one look at the value unlocking of Jio? How should one assess that? How has the market really accepted it? How will Reliance really look at it?
Sure. So I think to that extent, I think if you go back to 2019, the AGM that the chairman spoke about, he said 5 years and we'll be probably looking at the retail businesses getting demerged from the parent entity itself. So I think you've got 1 more year to go. And I think both the businesses, both Reliance Retail as well as Jio, are on a very stable footing now. I think both have a reasonable amount of revenues accruing to them. The EBITDA margins have remained extremely stable and the cash flow remains extremely strong. Jio remains a debt-free balance sheet on a standalone basis. And with the growth that retail is probably ensuring to embark upon, I think a lot of money in terms of new store opening can be generated from internal approvals itself. So if you have the landscape probably put out in terms of an SOTP valuation, I think there is a lot of value that the street is probably giving to both these elements of businesses as well. For the Jio, I think the equity value that is probably coming out anywhere between 725 to 775 rupees on a standalone basis. And for Reliance Retail, anywhere between 1250 to 1350 rupees. So I think a broad construct in terms of the expected SOTP valuations within the entire group itself. I think these companies are expected to garner more than half in terms of the SOTP valuation as we speak for Reliance.
Let you go. Appreciate you making time and speaking with us about all the facets of Reliance AGM and the key takeaways. But on that note, we are taking a short breather on the show. Don't go anywhere.